Hi, and thanks for joining us today. Today we're going to be breaking down some of the biggest VA loan myths that continue to confuse veterans, active duty members, even some home buyers who've already used a VA loan before. And the crazy part is that some of these misunderstandings are costing people opportunities, they're costing them money, they're delaying closings, and sometimes stopping them from buying a home altogether. We're going to talk about the myth that you can only use the VA loan once, the truth about down payments on VA loans, the hidden property condition issues that surprise buyers during the VA inspections, and appraisal rules that most people don't understand until they're already under contract. Because the VA loan is one of the strongest financial tools available in America, but only if you understand how it really works. So let's dive in. One of the most expensive lies veterans still believe is that they can only get one VA loan. People hear a VA loan benefit and they think it's like a coupon, like a one-time only. They use it once, gone forever. But that's not how it works. The VA loan is based around something called entitlement. Now, entitlement is basically the amount of guarantee that the VA provides to the lender on your behalf. So when you use a VA loan, you're not spending the benefit permanently. You're using part of your entitlement. That's a huge difference. Now, here's where things get interesting. Depending on where you live and how expensive the homes are in your area, your entitlement can stretch differently. In higher cost areas, veterans can still often purchase significantly more house with remaining entitlement than they realized. And a lot of veterans, they don't even know that they still have partial entitlement available until after they're already buying another home. Meaning that you could potentially keep one VA finance property and then still use your VA loan again on another property. And that surprises a lot of people. But here's the part veterans really need to understand. Just because someone assumes your VA loan, it does not mean that you automatically get your entitlement back. This is where people get trapped. Now let's say you sell your house and another buyer assumes your VA loan because it sounds great at first. You had a low interest rate, it was an easy assumption, and it was a good market advantage. But if your entitlement stays tied to that property and that buyer later defaults, your entitlement can still remain affected until that loan is paid off, meaning that you may not have full access to your VA benefit when you go to buy your next house. That's why veterans need to understand restoration of entitlement before signing anything. Because I've seen people accidentally handcuff their future buying power just because nobody explained how assumptions work. And this matters even more today because some veterans locked in extremely low interest rates over the past few years. So now assumptions are becoming more popular. But veterans need to ask, what happens to my entitlement after this sale? Not just, can somebody else take over my payments? That's a big difference. The VA loan technically allows zero down, but that does not mean that nobody that's using a VA loan brings money to closing. One of the biggest misconceptions is VA loans don't use down payments. Now that's not true. The VA loan gives eligible buyers the option of zero down. That's what makes it powerful. But many veterans still choose to put money down strategically. Now, why do people put money down? Some buyers use down payment to lower the monthly payment. Some use it to reduce their interest costs over time. And then some use it to help offset higher insurance or taxes, while other buyers use the money towards an interest rate buydown. So what is an interest rate buydown? An interest rate buydown is when money is paid up front to reduce the interest rate on the loan. Now, why does that matter? Because lowering an interest rate can dramatically impact the monthly payment over the next 30 years, especially in today's market. Too many people hear zero down and then stop thinking strategically. But just because you can put zero down doesn't always mean that it's the best long-term financial decision. Sometimes reserving cash makes sense, and sometimes lowering the monthly payment makes sense. Sometimes buying the rate down creates breathing room. The smartest buyers look at the entire financial picture, not just how little can I bring to the closing. And this is where people accidentally trap themselves financially. They max out their comfort zones on their monthly payment. They leave themselves no reserves. And then life happens. Your insurance increases, taxes adjust, HOA changes, unexpected repairs happen. And then suddenly that payment that worked on paper becomes stressful in real life. The strongest financial position is usually the one that leaves you options. emergency savings, flexibility, room to breathe, because moving should create stability, not financial panic. Now, nobody talks about this part of the VA loan until it delays their closing. The VA loan is designed to help veterans buy homes that are safe, sound, and sanitary. That sounds great in theory, but what surprises buyers is how picky certain property conditions can become during the process. You see issues come up involving missing handrails or peeling paint or broken windows or trip hazard, cracks in the sidewalk or driveways, roof condition concerns, water intrusion, exposed wood rot, electrical safety concerns. And sometimes these seem minor to buyers, but they can absolutely hold up a closing. For example, missing handrails on stairs. To most buyers, not a big deal. It's only 3 stairs. I can make that. But to a VA appraiser, that's a potential safety issue. Now suddenly repairs need to happen before closing can move forward. Or let's take peeling paint. That's a huge one, especially in older homes. Why would peeling paint matter? Because older homes, the older paint raises concerns about lead-based paint hazards. So what looks cosmetic to a seller can suddenly become a required repair. And this is important. Most of the time, these issues, they don't necessarily kill the deal. They just delay the deal. And delay creates stress, especially for our active duty members. The buyer gets nervous, the seller gets frustrated, and then closing dates move. Moving trucks get rescheduled. And if nobody's prepared the buyer ahead of time, they think that the entire transaction is falling apart. This is why having people around you who understand VA loans matters. Because experienced agents and lenders usually spot many of these issues long before you get too deep into the contract. That preparation can save weeks of frustration. A VA loan appraisal is not just about value. A lot of people think that appraisal only determines is the house worth the purchase price. But with VA loans, the appraiser also evaluates minimum property requirements, meaning condition matters too. And this confuses people because the appraisal is not the same thing as a home inspection. The home inspection protects the buyer by uncovering issues. The appraisal protects the lender, and with VA loans, it also helps ensure that the property meets the VA's standards. One major thing buyers should understand is that the notice of value. That's the appraised value assigned to the property. If the appraisal comes in low, the buyer, seller, and lender suddenly have decisions to make. Does the seller lower the price, or does the buyer bring additional cash? Or do both sides negotiate? And this happens more often than people think. People panic when they hear, oh no, the appraisal coming low. But low appraisal doesn't automatically kill deals. It creates negotiation opportunities. And in shifting markets, accurate pricing matters more than ever, especially when some sellers are still mentally pricing their homes based on peak market conditions from years ago. Another thing veterans should know about is tidewater. That's when the VA appraiser signals that they may not be enough support for the contract price before finalizing the value. And this gives agents and lenders the opportunity to provide additional comparable sales or evidence to support the agreed upon price. A lot of buyers have never even heard about this process until they're already in it. The biggest takeaway from all of this, the VA loan is incredible, but it's not an easy mode. There are rules, guidelines, processes, property standards, financial decisions, and the veterans who win long-term usually are the ones who decide to educate themselves before jumping into this process. If you're military, veteran, active duty reserve, or just curious about using your VA loan correctly, don't rely on some random internet advice from outdated information from somebody who used the benefit 15 years ago. The market changes, guidelines evolve, and strategies matter. And one small misunderstanding could cost you thousands of dollars or cost you opportunities that you didn't even realize that you had. If you want help understanding your entitlement, your buying power, your VA assumptions, property requirements, or how to structure the smartest move for your situation, send me a message with the word VA. I'll help point you in the right direction. And if this episode helped you at all, share it with another veteran or military family member who needs to hear it. Thanks for joining us today, and I'll see you in the next one.